Next, Singapore's Sovereign Wealth Fund, GIC, announced its 20-year annualised real rate of return of 4.6%, an improvement from a year before. It adds that long-term performance remains resilient against a more challenging global environment like higher interest rates. Heidi Ng takes us through the report.
GIC says its diversified portfolio and cautious investment stance helped it tide through persistent inflation and geopolitical uncertainties seen in 2022. Over a 20-year period since 2004, the annualized real rate of return came in at 4.6%, better than the 4.2% showing the year before. But if you look at the more immediate markets, say in a 5-year time period, nominal returns go down to 3.7%. Analysts say that's not surprising with inflation wiping out earnings.
It affects business fundamentally. In other words, profitability will go down because of the higher cost of doing business. And when profit goes down, definitely this will eat into the valuation of the, the companies or the investor entities.
To hedge against rising prices, GIC increased its holdings of real estate to 13% from 10% the year before, and it's looking at shoring up investments in infrastructure, a move that analysts say will pay out in the long term.
Infrastructure is a very long-term asset. Just think about, say, building a power plant that supplies power to a city, or building a highway that cars drive on every day and you collect a toll on the highway. And these are businesses that deliver services that are very essential infrastructure, right? Like electricity, water, even telco assets. Right? So this helps GIC build a very resilient portfolio because there will be these assets that generate constant cash flow no matter what the business environment.
While GIC says it doesn't allocate assets via geography, a quick look at the breakdown shows most of its investments destinations last year remain in the US and Asia, excluding Japan. One analyst thinks there's room to enter the market in China as it continues to recover from the pandemic.
I think if the high-tech sector is now regularized in terms of putting up their best potential and synergizing with regulations in China, and also contributing at the same time to, social contribution. So I think China would definitely, through this two recovery effort, put themselves back into the game that will invigorate the rest of the world.
GIC says it's also eyeing opportunities in the green sector, such as batteries and renewable energy. It adds that the fact that China valuations are cheaper is a big plus for investors.